Hey everybody, how you doing? So it is absolutely no secret that rates are up this year. And a lot of people are saying, well, I think they might drop next year. I might want to wait until that happens and then I'll get back in the market. We already talked last week about how that could create some issues because there's still not a lot of inventory out there. So the battles that everybody was fighting to try to get into a property earlier this year could start happening again if inventory stays suppressed and all of a sudden all the buyers come back to the market at once. Right now, we are at a 25-year low in new people applying for mortgages. So if you did want to be at the front of the stack, it might be a better time to leverage that and get into a home currently. But walk with me on the math real quick about what could happen if you do wait. So say you decide you want to rent for a year and wait for the rates to drop. So let's get an example where maybe you're paying $3,000 a month. It's going to be a total of $36,000 that you are going to pay for that year. So right now, if you looked at it and you said, based on a $480,000 purchase, 20% down, so we'll call it a $400,000 loan. If the rates were at 7%, you're at $2,661. The payment would be just under $32,000. Now, keep in mind, this is not taxes and insurance included. This is just principal and interest. Because I want to show you what happens if the rates actually do go down. So what happens if rates go down aggressively? Rates go down an entire percent and they go down to 6%. Well, your payment would drop to just under $2,400 in that scenario. What happens if things go really, really wild and they go all the way down to 5%? It doesn't really happen that often, but let's look at a scenario where it could. Your payment would drop down to $2,100. So if you look at the payment differences, you could save on a 6%. If it dropped a full percent down to 6%, you could save $263 a month. If it dropped all the way down to 5%, which again is a gigantic drop, it would save you $500 a month. But look at what it would have cost you if you waited on the rent because you paid the $36,000 a month or $36,000 for the year for the rent. Well, if I did that and I looked at the months it would actually take me to recoup the $36,000 that I spent, if I saved $263 by waiting for the 7% loan to drop to 6%, I saved my $263, but I spent $36,000 to save that. It would take me 137 months or over 11 years to recoup the $36,000 that I spent. If it dropped all the way down to 5%, so a full 2% rate drop, again, very rare for that to happen, I would save my $514 a month, which is great. But I spent $36,000 to save that $514 a month. That's going to take me almost 6 years to break even on that cost. And what these calculations don't even account for is I would have built equity during that time. So the $4,000 to $5,000 I built in equity is even more considering I would have built $0 in equity for rent. So is buying a home a great idea for you? Is buying now a great idea for you? The right decision is the one that makes you sleep best at night. But I wanted to put the math down because you don't want to wait for something just based on the thought of it or the theory of it. You want to base it on facts and math. If the math makes sense for you, that's great. If you look at it and say it still doesn't, to each their own, that is quite okay. Anyway, I'm Eric Spotswood, Regional Manager of Prosperity Home Mortgage. I hope you have a fantastic day.